please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hi, a very good morning. You're watching Trading Hour on CNBC TV 18. I'm Ekta Batra and with me is Prashant Nair. As you can see on your screen, it's turning out to be another good trading session for us. Yes, it is a consolidation with a positive bias, but you really have to put it in context in terms of the kind of run that we've seen this week, as well as what we're doing as compared to our Asian peers. So most of Asia, and that is really led by the Shanghai or the Chinese market, are fairly in the red, so it is an outperformance compared to what the Asian markets are doing. Otherwise, a lot of stocks in focus. Asian Paints, for example, is at a record high. TCS post numbers is also at a fresh high, so you can see all of those stocks gain. And from the broader markets, Infosys comes out with numbers tomorrow, so that stock is in focus as well. But something like a Shilpa Medicare from the broader markets is seeing a lot of traction. So lively market and very close for the Nifty and Sensex to their all-time highs. Hi, Prashant.
150 points or so, right?
Yeah.
I mean, a little over 150 points, Ekta. But you know, the tone is being set by what happened this morning with the U.S. response. I mean, to China's response.
Yeah.
Now we will get China's response to U.S. response to China's response. To U.S. response. So I think, you know, it's essentially retaliation. And everybody's saying, well, you started it first. But so far, we've not got retaliation from China. I mean, at least not yet. We will. The thing is, markets expect that to come. I mean, it's highly unlikely and going to be highly unusual for China to sit tight and do nothing at all. Although, I mean, you know, in comments which have been sort of quoted to Chinese foreign ministry official, and these comments were made in Beijing and wires picked it up, etc. I mean, you know, there were general complaining about how this, how the $200 billion sort of tariff thing now from the US disrupts global trade and that sort of thing. But the language did not specify whether they're going to retaliate, in what form, whether it's going to be an equal retaliation of $200 billion from China to US. So we don't know that, but we will surely hear more from China. I think that one can be assured of. Asia is all down as a result of that. The S&P 500 futures are down about 0.75%, and you got the market here, which after 2 or 3 days of pretty strong gains is up just 60 odd points or so. With that short comment, let's bring in Sudarshan Sukhani of S2Analytics.com. He's with us. Sudarshan, morning. Thanks very much. Your thoughts on the index and what you would want to do here?
Yeah, sure. Good morning again. See, for the index, I think markets are entering into a phase of consolidation, and that makes for a very choppy environment. We've had many days of good uptrend. That uptrend continues, but a choppy environment is not conducive to trading. So my suggestion in the morning was exit your long positions and step aside. That suggestion continues. We've seen 15 points of gains in the Nifty, but we can also see 30 points of declines. So there's no fun in staying in this trade today. So step aside from the indices and focus on individual stocks. Individual stocks keep on offering us opportunities for trading. KPIT is a buy. Actually, it's part of that mid-cap, large-cap IT, which is doing well, not just today, but for many, many weeks. So KPIT can be considered for buying today. In the same way, Vedant is a short sell. Metals are having a bad day, and that just follows the China-US dispute, I guess. But even otherwise, the charts are very weak for Vedant. So Vedant is a short sell. The third opportunity comes in the buy segment again, Hind Unilever. Hind Liver is again making those new highs. It's been consistently outperforming everything, and that should continue. So buy Hind Liver, buy KPIT, the two favorite sectors, FMCG and IT, and sell metals, Vedant, which is in distress anyway.
Okay, fair enough. Sudarshan, before we get to the Twitter queries that we have for today, I wanted your thoughts on something like a Shilpa Medicare, which is up 10%, and even something like an IDBI Bank. On the technicals, how does IDBI Bank look, and what kind of recommendation would you have on both?
Well, I don't track Shilpa Medicare, so I'm sorry for that, but I track IDBI Bank, and technically it looks horrible. Okay. Now, see, Ekta, markets can, sometimes news can drive. This is probably a random movement rather than a genuine uptrend. Don't dabble with IDBI Bank, just stay away.
Okay. All right, so no dabbling with IDBI Bank is Sudarshan's recommendation. 18% higher on a week-to-date basis for IDBI Bank, most of it coming in yesterday and today's trading session. But we have a couple of Twitter queries and Sudarshan for you. Swapnil has 35 shares of Bharti Airtel, which are bought at 464, wants to know the way forward.
Well, the cost price unfortunately doesn't, relate to the market sometimes. The market doesn't care for where we bought it. But at current levels, Bharti Airtel is now finding strong support. I think you should be a long-term investor and be patient. I can't give you a target or a time, but I know that Bharti is at support and slowly it should inch upward. So stay put, be an investor and hold on.
Okay, I mean, just want to put up IDBI, Sudarshan, just wanted your views on this one. Forget the news, just looking at charts. Yesterday's high was 55 rupees 90 paise, close was 53.30. So, I mean, the last 30 minutes average brought the price down and it closed at 53.35. At about 57 now. Sudarshan, what would you do if anything?
No, not at all. Do nothing, because it's not just 2 days, Prashant. You see the context. See how IDBI has been falling for days and weeks, and how does so much underperform the broad banking index. So 2 days doesn't make a change. It's still in a mini bear market.
Okay, fair enough. Thanks very much. Appreciate you joining in. Let's get some F&O strategies now. Yogesh Mehta of Motilal Oswal is with us to put those out. Thanks, Yogesh. What would you be doing?
Hi, good morning. On the Nifty front, we have seen highest closing post after 5 months, that Karnataka election day. So there it seems that upside momentum will continue unless we breach 10,880 levels on the spot based on the closing basis. So here we are recommending some of the few stocks on the buy side, and believing that Nifty view is still intact, that unless and until if it breaches 10,970, then upside is 11,100 and plus also. So on the buy side, we have the first one is India Bull Housing Finance. Currently it is quoting at 1116 future segment. Target is around 1210 level, keeping a stop loss of 1138. The other one is ITC, which has not performed so far, but today it has given a good breakout. Current price is 278.5 around, and keeping a stop loss of 273. Target could be in the range of 289 to 290 level. The third one which we are recommending is Capital First. The stock is laggard throughout the last 3-4 months, and now it is showing it has absorbed all the selling pressure, it seems. So that one can take a chance from there. 531.32 is the level currently it is quoting at, keeping a 515, 516 as a stop loss. Target could be in the range of 557 to 560 levels.
Okay, all right, Yogesh, we're going to leave it on that note. Thanks very much for joining in and talking to us. Well, some news coming in from Aurobindo. It's a fairly common approval that they've received for the antibiotic azithromycin. So it's the tablet version that they've received approval for, and it's sentiment positive and normal course of business, which is really coming in for Aurobindo.
You're with us here on Trading Hour. The market is now in the red. I mean, actually, there's a sharp dip which has happened. Before we took that break, there were about 18 points on the Nifty. And there's just about 3.5 odd points left now. 10,944 is what we have. And I mean, today, because of this tariff thing, once again, keep an eye out on global markets. Keep an eye out on Asia, and later, in a couple hours, how Europe opens. An eye on the S&P futures as well would be warranted if you're looking at this market, trading it very near term. But it's flat for now, 1-2 point change. Let's talk about commodities, what's happening there. Manisha is here, as always, with a quick roundup of everything. Manisha, morning.
Morning, Prashant. Thank you so much for that. Well, some pressure in the equity markets would be coming in because of the underlying metal prices, which have seen a very sharp decline. If you look at last couple of months, we have seen 15 to 20% of a cut come in for many of these metals. And today, that cut has just gotten deeper because we are looking at nearly 3 to 4% of a decline in the Shanghai markets itself. One, of course, it is the US dollar, which is trading at 11-month highs versus the yuan. And as you mentioned, it really is about US saying that it will slap 10% tariffs on extra 200 billion worth of Chinese imports. We've just gotten over with 34 billion, which both sides have done. And that is something that the markets were working with, had factored it in. A second trench is something that the markets now see as a full-blown war, and it will start impacting other economies. We, in any case, have seen European Union and other countries like Japan, etc., talk against it. So this is something that doesn't augur so well for the metals as a space. So we are looking at copper prices trading at a one-year lows. You have zinc trading at 13-month lows. Zinc actually is trading at a lower circuit in Shanghai, down by about nearly 6%. Apart from that, there also is this U.S. economic data, which hasn't been so well. We also are looking at increase in supplies. The demand pickup has been on the slower side. So each side that you see, even with the kind of sell-off that we have seen in metals in the last couple of months, doesn't really get better from here on as well. David Lennox, analyst at Fat Profits, now joins us to talk more about this. David, hi. It is started as a very, very weak day for the base metal prices. To begin with, how are you reading on the U.S. slapping more tariffs, more commodities now, or rather a longer Chinese goods list now coming under?
Oh, good morning, Manisha. Yeah, look, this was exactly the thing that the markets were concerned about, and so were we, and that is that this trade war would continue to perpetuate its life. And as we've now seen, Donald Trump has suggested that there will be more Chinese goods that will face US tariffs. Of course, now we're really starting to get into probably what are consumer goods, and it will be those consumer goods that are heavily users of commodities such as copper especially. And we've seen the commodity prices, unfortunately, really reacting to, firstly, what was the first set of tariff news, and we saw that decline. And now we're going to get, we believe, a second wind. And unfortunately, Manisha, there's really no point that we can see where this could all end. We could see a significant upstep in terms of further tariffs from China in retaliation. And then, of course, that we may see retaliations back from the US. So where this is all going to end, unfortunately, we've always said probably in tiers, but you can see with the commodity prices over the last 2 months, it really has taken the momentum that we saw on the positive side completely out of the sales, and we are now looking at perhaps a period of considerable downside.
You're right, David, when you say we don't know how big, how ugly, and where is it going to end. I mean, that is a lot of uncertainty, of course. But, with the kind of slide that we've seen in zinc prices for that metal in particular, would you say that, that one is more vulnerable rather than the whole sector right now?
No, certainly if you have a look at the zinc price, it had been one of the fastest running commodities over the course of the last 12 months. Given that it was in a supply deficit and inventories had considerably shrunk over the course of time. So we would expect, given that that was the high flyer commodity, that it would probably have a harder fall than all the others, and that's turning out to be the case. It will be no more or less impacted across the commodity space in terms of the use inside consumer goods, as will copper and a number of the others. So it's really only just adjusting as we think to the fact that it was a high flyer. But again, the other factor that's really playing into the commodity space, and unfortunately again a headwind, is the US dollar. And investors have gone to the US dollar rather than to gold because they do think as the US terms of trade perhaps narrow on the back of all these tariffs, that the US dollar will continue to rise. And that's unfortunately been what the market's been expecting, and that's what we've seen the US dollar doing.
So, David, if I give you, let's take in a case scenario then, if the things do get worsened from here, if we do see a retaliation on this one as yet coming in from China, how much of further downward risk in percentage terms then would you see in metals?
Manisha, that is really difficult to say. We have seen already, as you've suggested earlier, that we've seen a considerable slide in the prices already. And that was on the back of, I guess, a more contained tariff announcement. We're now starting to look at significantly bigger numbers. And if that's the case, then, unfortunately, we could see a considerable further fall-off. Putting a price on it, I think copper's trading around the $280, mid-280 US dollar a pound region. It's come off $3. So if that's the case, we could see it possibly shed another 20 or 30 cents if these tariff wars get further entrenched and get broader across the US and China, and perhaps also involve other nations as well.
All right, David, we'll let you go at that. So clearly lots of ifs and buts there, but the base metal price is clearly under tremendous pressure with what really seems to be happening between US and China.
Okay, and Manisha, a very happy birthday. I was assuming that gold prices would increase considering all the gifts, but nonetheless, have a great day and thanks very much for joining in and giving us that commodity update. Well, let's just concentrate a little bit on the markets as well, because now we're off the day's high for the Nifty. In fact, the Nifty's turned into the red as opposed to the positive bias that we were trading with. And it seems as though the culprit is also the Bank Nifty, which is at the low point of the day, so down around 0.3% currently for the Bank Nifty. And maybe there is that global pressure that we were seeing in the Asian markets, which is now percolating finally into the Indian markets. If you're talking about stocks, TechM, TCS, all of these stocks have come off a little bit from the highs, so the intraday chart will tell you more. But staying with the news of US tariffs and Chinese goods, CNBC's Eunice Yoon is reporting from Beijing with the details of the list of goods and what China plans to do. Okay, so that is the update coming in from the globe. We can take a break now. We'll do that with the news that Jubilant has launched 3 new donuts. And Jubilant and Nestle, in fact, have launched, are going to co-develop 3 new donuts. I don't know, maybe they'll be coffee donuts. I'm not sure.
Well, we'll get the donut expert, Mangalam, and the coffee expert.